Hi everybody, I'm Christian Reither of Curreen Capital, and today I want to help you be a better investor by using an investment journal. Now, I think that the investment journal is an underutilized tool that is incredibly powerful to make you a better investor. And I think that it is misunderestimated because it's sort of like double book entry accounting or using a cash register, where a big part of the benefit comes from reducing errors or mistakes. And as humans, we don't like to think about our own mistakes. It doesn't fit the narrative that our ego wants to have, which is that we're wonderful people who, are basically perfect all the time. And we're consistent in our thoughts and yada yada yada. And it's all not true, but it's the way our brain works to keep us, sane on this little ball of rock floating through space. But your job as an investor is to make good decisions under uncertainty. And to do that, you have to have an accurate view of reality and an accurate view of yourself. And this is a major way that you can get there. So what do I mean by an investment journal? I'll give you an example. Let's say I want to buy shares of Curreen because I think it's cheap. So what I write down on one page of my investment journal is I start today's date, May 21st, 2019. I write down all the stocks that I own, and I own 7, so that actually fits without some sort of microscopic font. 7 stocks, and then how much cash we have. What is the stock price today? What is my estimate of the upside to downside ratio of each position today? And what percentage of the portfolio is invested in each stock? So that's snapshot at the top. And then I write, should I buy more shares of Curreen? And I go into why. I think that the stock price is very attractive, the upside to downside ratio is very attractive, CEO is a good manager, the business continues to be strong, operations continue to go well. This beats cash. This is the kind of stock that I am here to buy. It fits all of my 3 key criteria. Da 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 da. So I've set out my thoughts of this is why I want to buy this now. And then I go through the exercise of writing a pre-mortem and say, okay, I bought this stock 2 years ago in 2019. Now it's summer 2021 and it has been a complete disaster. What went wrong? The CEO died and was replaced by some mediocre person because the private equity company that runs it isn't willing to pay up for a good CEO. Private equity company sold out to some terrible company at a low bid. There was a recession in Europe and earnings collapsed. Internet retailers beat out bricks and mortar retailers, and internet retailers don't care about what tags they use. The stock market collapsed, and I wanted to have the money that I put into Curreen, and I could have bought all these other opportunities. I write out all of those potential downsides. I write them out explicitly in my pre-mortem. And one of the benefits I get from this, of having written out what I like and then brainstorming what could go wrong, is it often gives me questions that I can actually answer. Like, if I'm worried about some competitor, I write that down in the pre-mortem, and then I can go say, I'm going to put down my investment journal and go try to answer that question, and I go do some research. So it's focusing my attention onto areas that I probably, almost certainly, wasn't looking at before. Because if I was looking at them before, I'm not really worried about them, or, I've stopped doing work because I'm so worried about them. So this will redirect your attention to areas which are actually very important. And I think a lot of the time, as people, as investors, we spend 80% of our time looking at one thing. We sort of ignore something else, even though that one thing might be worth more than 20% of our time that we spent on it. It might be worth something like 50. But if we don't redirect our attention, we're going to end up missing it. This handy little tool prevents you from being stupid in that way. I know, you're not stupid, everyone else is, but, this still helps. That's one benefit, is, makes me set out my thinking, which can sometimes help me clarify my thinking and, make me realize maybe I didn't know this much as I should. It helps me redirect my focus, perhaps to some risks which I had glossed over, and then it allows me to go, do the work and try to answer some of those questions that have come up. So it raises questions and maybe gets me to think differently than I would have. Then I write down, after, having my pros and my cons listed out and doing the work to try to answer some of the questions that may have bubbled up, do I want to, in this case, buy more Curreen? Do I want to buy more shares of this? And sometimes I start writing, and when I get to that, I'm like, actually, no. The thing that I came here to do, that I would have done if I hadn't put pen to paper, I no longer want to do. And I write that down, like, no, I'm not going to do this. I'm worried about XYZ, and maybe I will watch this. Like, this is the thing that matters, and I will continue to watch this. And it gives me, like, a trigger. Or I say, yes, I do want to buy this stock. And now, I'm done for the day. Next day, I come back and I report, like, I bought. Or it takes me another week or another month or something like that. Because it's illiquid. And I say, okay, I bought X thousand shares at X dollars per share. Whatever. And I write down. So now, I have a report. The investment journal has helped to clarify my thinking, bring up potential risks that I may have been glossing over, and to redirect my focus to areas which are, very relevant to making my decision. All of that is great. That is all great day one stuff that you get out of an investment journal, and that alone is reason enough to do it and to spend the time, which might be, an hour or two. Have that discipline, write down your thinking, and that's great. What emerges over time is even better. So not just do you get that day one boost to your performance from reduced mistake probability and enhanced thinking, but now you have a record of what you were thinking, what your portfolio looked like, how you evaluated that portfolio on specific days in the past. Now that is not something that is easy to recreate. You might be able to go back and get the stock prices of everything that you owned, but it's not a trivial thing to do, to be like, well, how many shares did I own, 3 years ago in March? Like, that's not an easy thing. Like, maybe you can go on to your Interactive Brokers account, type in the date, and you'll get it. Okay, maybe you can get that. Those prices might no longer be as relevant as they were because of spin-offs or something. So the data might get corrupted if you're on Yahoo Finance or something like that, but maybe you can get that. To try to get what you thought the upside to downside ratio, or however you look at attractiveness, on that specific date 3 years ago, good luck with that. If you're anything like me, your models have been updated, or even if they're not updated, now you've got 500 models for every company in your in your internet folder. Like, okay, cool. Maybe you can get the upside to downside ratios, but again, you're going to have to go in, find that specific version of the file, look it up, type in the price. No. That's like effortful. But with this, I can just flip through this date, that date, the other date. Sometimes questions will pop up, and I can think like, hey, what was I thinking back in March? Maybe you can answer that by spending an hour going through your files. With this, I can answer it in 1 minute. So that record is useful, and it's useful because it gives you the portfolio, what you thought about the portfolio, and also what you were thinking about that specific opportunity, and maybe whatever else you write in on that date. And this is priceless. Jim Simons of Renaissance Technologies has talked about how a few decades ago they decided to just follow whatever the computer program said to do, and that has been super helpful. And the reason they did that is because you don't have a sense or any memory whatsoever of what your gut would have said 2 decades ago when you were looking at a situation like this. With this, you can actually go back and see, what was my gut telling me 2 years ago, 3 years ago, whatever. Like, you actually have a record of what your gut, what you felt, and what you actually thought. And what you'll learn is your memory is terrible at telling you what your gut actually thought. This becomes powerful for you for understanding yourself and for answering questions that otherwise remain rhetorical. And I'll give you some examples. So I've looked back at the almost 6 years that I've been running the fund, and I was able to ask, like, well, when has the portfolio fallen apart? And there have been 4 times. And what did the portfolio look like before that happened? Why did that happen? And is there anything I can learn from that? And to try to do that without this, it would be a massive undertaking. But with this, it's like something I can do in an hour or two on a random afternoon. And it becomes the cost, the effortful time cost of answering a lot of these questions is dramatically reduced because you have this. And in some cases, it's only possible because you have this. So I can actually answer, like, what was my state of mind how did I view the portfolio, and how did I sort of feel about the portfolio before it fell apart? And are there lessons that I can take from that? I've looked back at like all of my investments, and where I've made mistakes, like I can actually read what I was thinking about those stocks, and I can tell, like, did I see the errors coming, or the bad things coming, or did I totally ignore them? Like, it gives me a better sense for, like, should I beat myself up a lot or not? Good to know. Before the stock market has fallen apart, which it did in early 2016 and late 2018, what did the portfolio look like, and did I want to buy anything, and how good was my thinking on the thing I wanted to buy before the stock market fell apart? And that's helped me to really internalize the idea of, like, stop worrying about the stock market, do good work. Yes, it's more likely that I'll do sloppy work when the stock prices are high and I'm sort of itching to act, but also if I do good work, I can buy something before the market falls apart and it still works out. Like, this is very powerful, and that's relevant for me. You can answer questions like this that are relevant for you and your process. There are some things that you can only answer if you have an investment journal, because you've written down your thoughts before you act. It's a gold mine, and it's a tool that you will only have if you take the time and are disciplined and put pen to paper. So it doesn't cost you any money, really. $20 maybe if you overpay for a semi-fancy notepad, but the value that you get from it is limited only to your own curiosity about yourself and the effort that you've put in to give yourself a record to analyze. So I encourage you to use this. It should help you think more clearly, reduce the errors that you make, and then it becomes this invaluable resource for analyzing yourself and how your strategy has interacted with the market over time. Like, how else can you look and say, like, before my portfolio did really well, what did it look like? What did it look like before it did really poorly? What can I learn from that? These are things that are very, very difficult to answer in any other way, and they're just some of the benefits that you can get from writing an investment journal. So I encourage you to do it, not because I want to create more competition for myself, but but because I want you to be a better investor. So go out there, do this. This is something that great investors like Peter Lynch has written about, how he's written down what he writes down on all the investments that he tracks. George Soros's Alchemy of Finance is basically one big investment journal packaged into book form. So great investors use this, even if they're very different types of investors. They use something similar to an investment journal to make them better. And this can make you better too. It's not something that people do because they're weak. It's something that elite performers do to increase their returns, improve their investing process. So get out there, start writing. Good luck.